Hello, 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 hello. Mic test. This is a mic test. Hello, guys. If the live audience has joined on any of the platforms, either YouTube or TradingView, can you confirm how is the audio as well as the shared screen while I set up some incognito tabs to check on the comments, because the comments sometimes don't load up in the live stream. So, Akolsnikov, thank you for the confirmation that the audio is fine and the screen is visible. Okay. I don't seem to be able to find my own live stream on tradingview.com/streams. Okay, there it is. Okay, guys. So those who want to join, they can just join in. I won't be waiting any further. So let's start off the webinar with the legal disclaimer here on screen, suggesting that all content presented here will be for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading, investing, or any other purpose, you yourselves will be liable for your profit, loss, and loss of profit. And rest of it you can just read here. Okay, with that out of the way, let me just give you a small introduction. So my name is Neerav Yadav. I am the founder of 50eyes.com website, which is a website where I share my views with the public, right, traders. I also run educational classes, courses, etc., etc. And I also have a YouTube channel called 50 Eyes Market Analysis. Been doing this for about 8 years. I'm also the author of the book called Think with the Markets: Secrets to Achieve 80% Plus Accuracy Using Elliott Wave, which is available on Amazon Kindle, as you can see, as mentioned on my YouTube page over here. And one last thing, one of the main noteworthy points about my work is that I have kept a track record of all my work for the last 6+ years, and my accuracy for all the trades analysis which I have done has stood more than 80%. Anybody can check this public record by visiting 50eyes.com/forecast-accuracy. And I'll just quickly run you through this. 2016 83%, 2017 87, 2018 84, 2019 84.88, and 2020 88.5. So as you can see, it has reached as high as almost 90%, and 2021 is 82.22. So that's about it for my work. Now let's go ahead and focus on what we are going to do in this webinar. Nikhil is saying great. Nice to hear that, Nikhil. So in this webinar, as I mentioned, my area of expertise is Elliott Wave and advanced price action. So we will be using exactly that, and we will be navigating across some forex pairs: EURUSD, USDCAD, USDJPY, etc. And then we will move on to indices: S&P 500, Nifty 50, commodities, gold, crude oil, and in the end, we will have a quick look at Bitcoin. So that is the way we will proceed with the webinar. After every discussion, what I will do is I will ask you guys if you understood, and if you have any doubts, you can at that point in time type them in the comment section. Avoid putting in lengthy text during the discussion, as they might create a distraction, and after the discussion is over, I'll obviously check every doubt or query that you have had, right? So that's about it for the introduction and how we will proceed. Just give me one final confirmation either on YouTube or TradingView that everything is working, and then we will move ahead with the first chart. Space trade mostly. Nikhil will just go through the pairs which I just mentioned. So can anybody give an actual confirmation about the screen and the audio? I believe the audio is good as I'm getting some comments. Just type in visible, audible, something like that. Just one final confirmation. Nikhil, can you confirm anything here? I think you are online. Okay, thank you for the confirmation. In that case, let's move ahead with our first chart, which is the chart of Euro USD. In our last discussion, I was of the view that Euro USD was heading higher or sideways and then higher. So I'll just go over the whole analysis again for you guys here. So first of all, our view on Euro USD was 1 second. So our view on Euro USD was that it was in a triple zigzag kind of correction to the upside, and a triple zigzag kind of correction is a Elliott wave correction, which basically consists of three waves in the upward direction. The first is called a W, the second wave is called a X, sorry, the second wave is called a Y, and the last leg is called a Z. So each of these W, Y, and Z waves are connected via a connecting wave, which is called an X, which is called an X, and which is called X is called Z, obviously. So W, Y, and Z are connected by X waves, the connecting waves. So in this particular case, our count, as you can see over here on the chart, suggests that we were expecting the W complete over here, X here, and Y here. So when we did the last webinar, which was on Friday, right, and the date of the last webinar was 2nd of December 2022, the market was trading somewhere around, let me check, somewhere around here, roughly speaking, somewhere in this price range. And our view was that this market can go lower and then up, or it can go straight up. So the analysis was based on two different assumptions. The first assumption was that this whole leg, this whole correction of what you call wave X, the second connecting wave, was complete here. Right? If this correction was complete here, as you can see on this rough chart, after the completion of the second wave X, we will see a up move. That is what our understanding of this pattern suggests. So based on that, the first view, one of the two views was that this market can head on straight up, right? And the second view was suggesting that this X is not really complete here, in which case we would see some more sideways movement, basically movement within this price range, somewhere here or something like that. It could become complex, it could become simple pattern, it can become multiple things. But anyways, the whole idea was that it would possibly range within the marked zone. So the second understanding suggested that the market would go sideways and then up, right? So in the second scenario, we still were expecting longs, but the longs were swing longs. They were not straight right out intraday longs or anything. But the conclusion basically was we will just look out for long trades in this market. Based on that understanding, I had initiated some long trades on Euro USD, which I have closed. So let me see if I can pull out the chart. So here is the chart on Euro USD. Euro USD. So here's the chart I've just posted in my Slack group that booked profits on shorts will look to re-enter later. So I have booked profits based on the analysis which is of a possible diagonal formation. So we'll look at that now. And my exit was like 5-6 minutes before this webinar, I think. So because I got a trigger right before the webinar and I decided to just exit at that point and look for re-entry later. So let's just discuss that part. Why did I exit and what is the strategy now? So first of all, if we consider this as the X, then the remaining price action can be considered a possible diagonal formation. That's one of the many different possibilities that are possible. So if it's a possible diagonal formation, then we can expect that the wave Z will be formed after a dot A followed by a dot B and then a dot C. Right. So basically, again, those of you who are not familiar with what I'm saying here or the Elliott terminologies, dot A, dot B, dot C are basically just this. Right. So if you compare the left hand side with the right hand side, you will understand that we are basically looking for an up leg called dot A, down leg called dot B, and then an up leg called dot C. So in this particular case, the up leg called dot A is seemingly complete as a possible diagonal formation. Diagonal is a contracting kind of pattern which looks like this, which has 5 waves and then an overlap between the fourth and the first wave. So if these are the 5 waves, then there will be an overlap between the fourth and the first wave. That's what we call a diagonal. So that is the kind of pattern which I think I have spotted here, possibly. And if this is the pattern, then that suggests that the A has completed. If A has completed, then I will like to wait for the B leg to correct to the downside. Once the correction to the B leg to the downside is complete, we can re-enter longs, right? So there are multiple ways we can do that. If this analysis follows through, first of all, we can then just count the internals of this wave B, right? Simplest thing is you can just also draw a 50-60% retracement zone of this A, right? And then once the market comes within those zones, within that zone, then we can look for longs. Secondly, you can just ignore all that, let the market do its thing, place an alert near the high. So once the market does whatever it does, whatever patterns it's forming, once it takes out that high, that's when you enter the longs, right? So there will be another again multiple different more ways. So not much point discussing them here. The moral of the story is that longs, I'm still looking for longs, but right now I'm out of the market. I'm waiting for a proper setup or an opportunity. And the way the market will proceed, this is how I think it will proceed. Of course, new possibilities can become visible once more price action comes on the chart. That's my outlook on Euro USD. What do you guys think? How much of it were you able to catch? Do you have any doubts? Please type them in the comment section. In case you understood whatever I'm speaking here, kindly revert with the clear or understood in the comment section so that we can then move on to the next chart. Nikhil and other participants who are online, I'll wait a while for your feedback here if you are still with us. Okay. In that case, let's head over to the next chart. So the next chart will be the chart of EURCAD. Let me just quickly note down the time of completion here. So EURCAD, let's have a quick look. Current position. So no new trade here. The discussion on EURCAD previously was that we were expecting Harsh, kindly stop spamming the comment sections. We are not discussing shares here. Just check the name of the webinar. So first of all, last time when we were discussing EURCAD, we were discussing that we are expecting a possible diagonal formation over here. And the possible diagonal formation suggested that there is a wave 1 up, 2 down, 3 up, 4 down, and then a leg up. The setup we had for sell-off was that we were waiting for a clear break of this green channel, this parallel channel, right? And once this parallel channel was broken to the downside and possibly having a retest, something of this sort, let me draw it better. A possible retest, then we may have looked for selling on this counter. None of this really happened. So discount, and as I also said, discount seems less and less legitimate. So none of this has happened yet. And as such, we cannot relegate the diagonal possibility right now. So we can just keep on this count and let the price action do its thing and figure out what is going to happen in a later discussion, or what do you call, in a later webinar, as the price action becomes more clear. So EURCAD, I would say, is a wait and watch for now. Possible shorts are still, shorts are still possible, but they are low probability, right? If anybody is interested in taking a low probability trade on this thing, then they should wait for a break of this green channel. That will be our alert or trigger, whatever you would like to say. Nothing really to add over here. And if you have any doubts, you can just type them in the comment section. And I don't think there is a good participation today, so I won't wait much. If you have a doubt, you can just type in, or I'll just move on to the next chart. The next chart of our discussion would be USDJPY. So let's quickly check the chart over here. USDJPY. In this chart of USDJPY, when we discussed the last time, our analysis was following a triple zigzag formation, I believe. But let's just quickly check which one of the three we were following. So WXYZ, or this one, or this one. Let's see. Okay. So this is the count we were following, as you can see on the 4-hour chart. So in this count, again, as I discussed in the last count of, not last to last count of Euro USD. If you guys recall, in Euro USD, I was discussing a triple zigzag formation, and that triple zigzag formation was in the upward direction. In this count, it is in the downward direction, right? And for those of you who are just checking out the USDJPY coverage and they did not check out the Euro USD coverage, I'll just quickly reiterate on what a triple zigzag is. So basically, we are talking about W leg down, Y leg down, and then Z leg down. So this is what you would call a triple zigzag. All three legs are connected by a connecting wave X, a connecting wave X, right? So in this triple zigzag formation, we were at the point Z, right? And our view was that there was no confirmation if the Z is complete as of yet, right? So because there is no confirmation and there is no confirmation still, but as such it looks to me like the downside may have completed itself. Let me just clarify the counts here. I think there is a one more possible outcome here which I have not noted on this chart. Let me quickly check that. There is still a possibility of one more down leg here remaining. So we still don't have a confirmation if the Z is completely done for over here or if it has one more down leg remaining, right? So in this case, what would be better is to wait for some upside confirmation. Once we get some sort of trigger, as such, theoretically speaking, the actual trigger should be considered somewhere here, price action wise, supply demand wise. Once the market closes above 138.30 levels, roughly speaking. So let's say 138 to 138.30. If the market closes within this range and then takes a support above this range, then we can consider the fact that Z completion is a very high probability scenario, and then we can look out for longs. As long as the market is not doing that, there is a possibility it might go down again for the wave Z, right? So that's the reason why I was saying that we do not yet have confirmation for longs. So the trading strategy or the trading opportunity that will appear on USDJPY would be above this zone 138 to 138.30 once the market takes support above it, right? And we will be looking for long setups. Wait and watch for now with this strategy in mind. So if you guys have any doubts in this discussion, you can just post them or anything related to Euro JPY. So next chart will be the chart of EURJPY will be the next chart. This one was USDJPY. I have a running trade on EURJPY, by the way. So we will have a look at that. So let's now head over to the chart of there it is. Okay, so this is the chart of EURJPY that we are following. In this chart, as you guys can recall, last time when we discussed, there was a short setup that I pointed out in live market. The short setup was that if the market, let me just redo that. Short setup was if the market was forming this W, X and Y formation. We were somewhere over here when that short setup was mentioned. 1 second. Yeah, sorry. So this was the level. So we were somewhere over here when the short setup was mentioned, and I actually took the trade, and the market has later on gone down precisely as it was suggested. So once this leg is complete, it looks like it should head higher, unless of course this count is completely incorrect and this market is doing completely something else. So since we cannot prove the other side, that is it has more downside remaining, and the possibility of upside looks quite strong to me as of now, so I have entered longs on this market. Technical stop loss should be below this 141 level, but I have my stops a little bit higher than that. Overall, the analysis that we have at this point in time suggests that quickly correct this. Yeah. So overall, the analysis suggests that we can see the market going 146 and higher. So obviously, since the overall trend also says that long-term wise it has one leg up remaining, which should take out the last high. So that remains, but immediate targets, what I'm thinking is should be around 146, 146-ish levels. So that's my opinion as of now. Obviously, if new price action suggests something else or new analysis comes into play, I might change my opinion and take out the trade or add more or reduce the size, etc., etc. But as of now, EURJPY, we will be looking for longs. I am already long with the stop loss around 141 and targets around 146 in our mind or on our actual broker sheet. Okay, so if you guys have any doubts on EURJPY, I'll wait in the comment section. If you understood what I'm talking about, please type in clear, right? And then we can move on to the next chart, which will be crude oil. So I seem to have gotten a comment. It's small. Do you offer teaching services? Yes, it's small. I do offer teaching services. There are video courses and personalized classes. I would suggest you check out my website 50eyes.com, or if you want to talk to me directly, you can just email me whatever doubts you have after checking the website 50eyes.com/contact dash us. No further doubts on this or any doubts, sorry, on this thing. So I'll consider this as 757 complete. Let's move on to the chart of crude. So crude oil, let me quickly load that up. There is crude oil. So there we have it, the chart of crude oil over here. See which one I'm following. Yep, this is the one we are following. So in crude oil, as you can see over here on screen, we have again a triple zigzag in play. Looks like we are having a lot of them recently. So I won't go into much detail about that because I've already discussed in the chart of Euro USD, which we discussed like 15 minutes ago, 20 minutes ago, something. And then again in the chart of USDJPY, we discussed what a triple zigzag pattern looks like, right? So because we have already discussed all that, I'll quickly just leave that discussion uh, and as you can always check out the recording. Let me move this chart from the screen. So as you can always check out the recording, you can just go 10-15 minutes back and check out Euro USD discussion or USDJPY discussion if you are watching it later on TradingView or on YouTube. So what we have right now here on screen, or what should be the point of discussion right now as per my understanding of this chart, is that we are thinking that this market is forming a possible flat correction from this point, right? So I'll remove everything, and a flat correction from this point means that the market should go down in 3 waves and then go up in 3 waves, and then it should go down in 5 waves, right? So that is what an ideal flat structure would look like. So one second, I have drawn the inverse for the middle part, which is correct, but that's not what we want to discuss. So as you can see, the flat structure of a market downward side should look like this. Similarly, the flat structure for the upward should look like this: 3 up, 3 down, and then 5 up. So now this is the actual thing we want to discuss. So this 3 up will be called the A, 3 down is called the B, right? And this C up, as you can see already, is the point of our discussion, right? So this C up is what we wanted to analyze. So last time when we were discussing, I pointed out that there was a possible long setup here around 82.3 levels on the O and A data feed. Remember, the data feeds are different, then the prices will also be a little bit different. For instance, the CL1 futures chart right now is trading around 82.27, and this O and A data feed is giving 82.60 because it's a CFD contract. So, anywho's, coming back to the actual point of discussion. So, last time when we discussed, my view was that this market could be doing a couple of things, but most importantly, because our analysis suggests that C lag is under formation, then more upside can be seen. But that upside was not a very strong upside, because I think that this market might be forming what you can see over here on screen, a possible diagonal, right? A possible diagonal would mean, one second, let me just completely draw it properly. Okay, so here it is, the diagonal. So the possible diagonal would suggest that this market is going up for the wave C, and it has just one more up leg remaining. That's what the diagonal is going to basically suggest. Once this one more up leg is complete, then we can see a possible fall if this count is being followed. So let's go ahead and see. So I can draw it over here. The diagonal should look something like, I will use a different color, something like this. So not the best drawing, but basically what the point is that if we draw the trend lines, they will diverge. So it's a expanding nature diagonal, and secondly, the 4 and 1 will overlap. So this wave and this wave overlap. So if you see on the actual chart over here, you can see this is the 1, 2, 3, and the 4 is overlapping with the 1, right? So because the 4 is actually, I should check it on the lower time frame chart, but as such, it does look like it's overlapping. Okay, so as I suggested, this looks like a possible expanding diagonal. Once this last leg is complete, then we can expect downward movement. So long, as I just mentioned, are there, right? They are tradable, but because of the lower upside potential or expected lower upside potential, it is best that we do it on only intraday or smaller time frames basically. And second trade setup would be to not trade longs at all, let it complete. Then once the market breaks this, one second, once the market breaks this trend line, right, to the downside, then we look for shorting. So that's the second setup: break of the trend line, break of this expanding diagonal trend line, break of this expanding diagonal trend line to the downside. So that would be another setup, or another setup which is in the short side. So I think pretty much clear here. There is a long setup here, right? On the shorter time frames, we can look for longs on crude oil, right? The immediate target should be anything higher than 83.813. So this kind of trades, we don't look for very precise targets. What we kind of do is scalping. So take multiple positions at the current level, kind of thing I would do if I were to trade this leg. And once the market takes out this high of 83.813, I will start to take out my positions 10%, 20%, 30% like that sequentially. If it continues going higher, I'll keep taking them sequentially 10%, 10%, 20% like that. If it suddenly reverses after taking this high, then I'll just hit the button to take out all my positions. So that's the general way you trade these kind of small targets. So little bit of extra info here other than the actual trade setup. I believe the setup is rather clear here. We discussed both the upside potential as well as the downside potential here, right? So if you guys have any queries on crude oil, I can just take them. Please type them in the comment section. I'll wait for a few moments. If not, then we can just move on to the next chart of gold. So there are no doubts seemingly over here. So in that case, or let me just check one more thing. Let me check the incognito. Okay, so there really are not any posts or comments or doubts. So, okay, in that case, let's move ahead with the next chart. The next chart would be the chart of gold here. So let's quickly see what's happening here. Last time there was a long setup on gold, which we discussed. That long setup still looks to be in play, and let's see more specific things about this chart. So gold seems to be in a sort of upside movement, right? There are multiple ways this thing can be progressing. There are some bullish ways to view that, some extreme bullish ways, and some bearish ways as well, or less bullish, I should say, rather than bearish. So as of now, I think the gold long positions are still holding well, right? I think the longs can still be kept, or we should still look for re-entering the longs. My strategy would be that I think we have a possible flat here. Let's say that this is a dot 1 and this is the flat structure here. So once this dot 2 is complete as a flat, we will look for long setup, right? So basically, I think that if this market progresses here in 5 waves from this point of reference, something like this, and then goes above again and takes out the last high, then this will be a long setup. That's my view as of now on gold, right? So I will look to play this market to the upside. Trade setup I've just discussed, there is not really much to say here, right? Ideally, it should at least touch the last high in this kind of a setup. That's why you also saw that I placed an alert around 1784. I just want to know if the market has done the obvious thing or not. Gold, still look out for long setups. Wait and watch for now for the current downside leg to complete, and then a upside trigger to come into play. If you guys have any doubts, I can just read the comment section. Also, if you are understanding whatever I'm saying, you can just type in clear. That would be better. After all, it's a webinar. But today's participation seems to suggest that I'm doing a recording of a video. Okay, I don't see anything written here at all. So I'll just move ahead with the next chart. Next chart will be the chart of S&P's 500 American Stock Market Index. Let's check and load the chart on screen. So as you can see on the screen, we have the chart of S&P's 500. In the last webinar which we did, we were discussing the same pattern. Although it is a bit of a less probable situation here. Yeah, but I think it is still the pattern we should be following for now. Okay, so in this chart of S&P 500, our current analysis is suggesting, I'm just talking short term wise only here, that we have the wave 1 up here, the wave 2 down here, the 3 up here, the 4 down here, and the 5th up here, right? Based on this analysis, what I think is going to happen over here is that we have a first leg complete here as, let's say, a wave A. This is going for a wave B. It possibly is complete here, or it possibly is continuing sideways, right? So within the sideways movement, it will just range within this price action or price range of around 4105 to 3920 something levels, right? After the range is the market has moved within this range, this specified range, then we can move to the upside. So basically, I believe one leg up is still remaining. That's what I think at this point, right? The only issue I'm seeing here is that the minimum upside target was around 4085, as you can see over here. It has already been touched and actually the market has moved a little bit above it as well. So we cannot completely relegate the bearish possibility at this point in time. So longs should be taken. Longs is what we are looking out for, but we should remain a little bit cautious. That's what the message will be here, right? So longs still we'll be looking out for, but with a cautious approach. Cautious approach literally translates to smaller position sizes, checking the charts on regularly on a lower time frames. So that's our take for S&P's 500. We are still looking for longs, right? We have considered, although, the possibility that the B and the C may have already completed here, but the higher or the more likely scenario is that the B is still continuing, which should be leading it to one more leg up for the C. So that's the scenario for longs. That's the scenario for shorts. That's our discussion for S&P's 500. Rather straightforward, right? Again, if you guys have queries, you can just type in comment section, or I can just move ahead with the next chart. Should be of S&P Nifty's 50, sorry. Let me load on the chart of Nifty 50 now on screen. So here we go. This is a chart of Nifty 50 which I am following at this point in time. Right. So in this chart, the current view that I am holding is that we do not have a confirmation that the upside is completely over. So until we get a confirmation, my bias will remain still bullish, which basically means that we will be looking for longs still. And the current count I have on screen is that we are following a correction to the downside, and the correction is our ABC correction to the downside: A down, B up, and C down here. And the next leg we are expecting is at least a three-legged up movement, so it will be A up, B down, and C here. So based on the whole thing, we come to realize that our point of reference should be around the level of 18,592 on 5th December 2022. From this point of reference, what we see over here is the possible movement as an ABC up. So in this ABC up movement, basically what we are seeing is a flat here. So let me just put out the alerts real quick. right? The flat structure basically suggesting that any downside movement should be bought if the pattern is being followed, right? So basically any price movement within this price zone range should be considered as consolidation for the next leg up. The larger the consolidation, generally the stronger will be the move, generally speaking. It is also possible that the B is complete here and it is going to go straight up from here. And second possibility is it's continuing sideways, doing whatever it's doing, and then it will go up from here. So longs are the way for Nifty as per my understanding. The view holds as long as the market holds the level of 18594. So as long as the market stays above this level, we are good and we are looking for longs only. So that's my quick take on Nifty. Looking for longs only as long as the market stays above the mentioned level. Let me note down the time for this chart and then we will move on to the next chart or the last chart, which is of BTC. I am amazed a little bit of the extremely low participation today. Maybe. Anyways, so before we move on to the next chart, let me give you a quick rundown of the next few webinars we'll be attending for those of you who will be watching this as a recording. So next webinars will be done on Wednesday and Friday, right? Timings will be the same, 7:30 p.m. IST and 2 p.m. BST and 6 a.m. PST. So I will also post the timings in the comment section, right? And the dates will be for Wednesday is 7th of December and Friday is 9th of December. So these will be the dates for the next webinars. I'll be discussing live setup with you guys as I'm doing right now. And before we move ahead with the next chart, if you guys found the content here helpful, definitely hit the rocket button on TradingView, like button on YouTube, and share it with at least 2-3 of your contacts in social medias. If you have a Twitter or Facebook, Insta, etc., whatever, just share the content and tag me. My Twitter profile is at the rate of 50_eyes. So that way I can reach more audiences and these webinars will look less dreadful. So that's my message to you guys. If you like the content, share it. And these are the timings for the next webinar. So let's quickly have a look at the last chart of BTC, right? BTC, there isn't really much in BTC to discuss. It is still in the same, what do you call, it's still following the same theory as per my understanding. So the analysis we are following on BTC is basically we are thinking that from this point we have a flat formation, right? And the analysis basically was that this price zone should offer a support. So now that we have everything removed from the screen, so this price zone was around 15,800 something to 14,400, 500 something, roughly speaking. So the market is already testing it, right? But this is not the clear test. We were expecting more of a penetration of this level and then a move up. Anywho, even if the market bounces above this level, a level of 22,000 plus will be confirmed. Not even 22,000, 21,300 plus should be confirming that bullishness has returned in this counter. And once this level is taken out, we can look for new longs, at least till the level of 31,130. Right. So there is not really much to add. This is the same theory which I have been telling you guys for last 7 webinars. This is the 8th webinar in this series of trading opportunities webinars, by the way. Not really anything to add on it. If you have any doubts, you can just type them in the comment section. Otherwise, I will consider this as the end of the discussion and at the end of the charts, right? Okay, guys, I'll just post out the timings for the next webinar as well as timestamps for these videos or these charts which we discuss in the comments later on. Hope you guys like it, share it, and I hope to see more participation in the next one. Bye.